Global attention has shifted to the semi-annual monetary policy report to the Congress. Over the next 2 days, Jerome Powell, chair of the Board of Governors of the Federal Reserve System, will testify. We've seen the cumulative change in the federal funds rate since the start of the initial rate increase is the steepest we've had for quite some time. The probability of a 50 basis point increase has been steadily increasing. It's now 30.6%. At the same time, China's Xi Jinping takes a rare direct aim at the US in a speech. China is becoming increasingly aligned with Russia, and it's making headlines on the Wall Street Journal. Are we headed for a soft landing, a hard landing, or no landing at all? Let's run the numbers and find out. Hi everyone, I'm Ken from CryptoTradingKS. I seek to share my 30+ years of financial experience to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. Let's run the numbers. Bitcoin is currently down 0.09% to 22,396. Ethereum is down 0.06% to 1566. In the main markets, in the past trading session, and Masterclass students, you get my live chart in TM6. When we look at the VIX, the fear gauge of the main market fear was decreasing. That led to a rally in the major indices. We can see that bond yields have been falling and bond prices have been increasing. What's really interesting to see here, as the dollar came down, gold also came down. Typically, when yields decrease, the dollar decreases, gold goes up. What is happening with gold? Obviously, it's hitting a smart money sell area. But there's only one way to detect this smart money sell area. That is through the CTKS method. As I mentioned yesterday, oil was getting above short-term resistance, and we can see that's continued. We can see the risk-on appetite through junk bonds and high-yield corporate bonds maintains a positive advantage at the current time. Statistically, the VIX loves to spike around this month, so we'll just see if that happens or not. Remember, an average is a statistical measure, so if you've got one hand in the fire, this is what I used to teach my students when I was lecturing first and second year statistics. If you got one arm in the fire, one arm in the freezer, your average temperature. Statistics is fun. But of course, you've probably lost both arms. We can see recently when we analyze the S&P 500 by the CTKS method, we had a technical bounce from a very strong level of smart money support, and the markets have rallied. Why have they pushed down recently? Because we're coming up to another level of smart money sell activity. This is why price is always moving in a wave. The S&P 500 is currently 40.50. When we look at financial markets without the CTKS method, it's really hard to know where the true market resistance and true market support actually is. This is the DXY, currently trading at 104,350. When you apply the CTKS method, you can actually see where smart money is buying and selling. So what do we actually see with the DXY at the moment? We can see that the DXY has been under a lot of sell pressure, and that sell pressure is starting to decrease. But the concept is the DXY is quite weak. It didn't even come back in to test this smart money sell area. And where is that smart money sell area? It's between 104,397 and 104,471. What does this actually mean? At a time where people would think the dollar is absolutely and utterly going to rally, there's been so much sell pressure on the DXY, so much negative momentum that it's pushing it down. Remember, price is always moving in a wave, and it's always ping-ponging between smart money buy levels and smart money sell levels. And how it does that rebound is how we can tell what kind of strength that underlying financial asset has. Gold absolutely loves conflict, and it also loves inverse real rates. We can see that inverse real rates continue to increase. This is a very positive probability stacking for gold. With the DXY coming down and yields coming down, we looked at gold and said, why isn't gold actually rallying? Because it's actually struck a smart money sell area. And you can see that through the CTKS method. It's literally like getting X-ray vision. Gold is currently $18.46 and 61 cents. One thing to understand, these Stanfield zones actually assess price since 1883. This is not recent price action analysis. This is all of price action analysis. One thing to always consider, price is always moving in a wave. And it's always bounding between smart money buy areas and smart money sell areas. Smart money buy areas, smart money sell areas. You must keep this in mind. Gold has recently witnessed a huge amount of support and it's rebounded. Can gold continue its upward thrust? Let me know in the comments. What do you think? As professional traders, we actually understand that we must assess the market by its own actions, and doing three-dimensional risk management each and every day is an important way to stay in synchronization with the market. I've often said that synchronization and markets go like this. The market says, are you synchronized? If you're synchronized, the market will hand you money. If you're desynchronized, the market will take your money. If you're getting desynchronized, it's very important to scale down. If you're getting synchronized, it's very important to scale up. Remember that you control the trade or investment, but the market controls the return. And that return is based on your active learning, your knowledge and your courage. But the market always penalizes blame and gambling. So please don't do either of those things. The CTKS method is a methodology that I invented, and I created a standards-based process to reveal smart money buy and sell levels from any price chart. The CTKS method literally gives you X-ray vision inside markets, and we can see that play out every single day. If you would like to request a chart for me to mark up, it could be a stock, a crypto, futures, forex, commodities, or any other price chart. You can use this particular form link and you can let me know. For example, if you're an investor or trader in Tesla and you're looking at Tesla's price action without the CTKS method, you'll be looking at this. But wouldn't it be so much better to know where smart money is going to step in and buy and step out and sell? If you had your Tesla chart marked up with the smart money buy zones and the smart money sell zones, you would see Tesla's price is actually much more predictable than a lot of people would actually anticipate. And what happened when we got this very steep sell-off in Tesla? The smart money buy area caught price, and what did it do? It rebounded, and it hasn't even come back to retest this area just yet. A lot of people are trading and investing like this. That's not the way to go. You want to instead put on your X-ray vision and know what smart money knows, and you can do that through the CTKS method. When we look at the S&P 500 and we compare it to the 9 sell-offs and recoveries since 1966, we can see the S&P 500 has done very well. It's overcome a level of resistance. It's actually got underpinning support as well. And if you were marking up the S&P 500 using the CTKS method, you would have understood that there was very substantial smart money support underneath this recent low, and you would have expected a technical bounce, which is actually what happened. You can also learn about the CTKS method through the CryptoTradingKS Masterclass, and I would like to thank someone you know for his very kind generosity in reaching out and funding a CTKS Partial Master Scholarship awardee. Now that is still to be drawn and awarded. That could be you. Your name could go in there as an awardee for the Someone You Know CTKS Partial Masterclass Scholarship. The link to apply is in the description of this video. A lot of people feel that crypto is very scary, and the mainstream media press loves to hype up the disproportionate criminal activity. There's criminal activity in every financial market. There's fraud in every financial market. But it's not stopping MasterCard from launching a Bitcoin card in the UK and the EU. Obviously, MasterCard is not reading the headlines from the mainstream media because it wants to make money. MasterCard actually understands that Bitcoin and crypto are a new technology that creates Web 3.0, the Internet of Money, or money over IP. The mainstream media news just absolutely abounds with negative news stories on crypto. Why is that? Because the banks are in trouble. Why do I say the banks are in trouble? The banks are losing their fee streams. And what is all that about? When you look at the world's largest crypto exchange, Binance, it did $39 billion worth of volume in the past 24 hours. We can see Kraken down here. It did $554 million worth of volume. So you can see that there's a lot of volume passing through these exchanges, and this is only 24 hours. With so much money at stake, it's absolutely logical for the crypto industry to create its own banks. Crypto was originally developed to get away from banks. It was developed because of the GFC. When the mainstream media talks about regulation, they definitely were not regulating the banks when the banks caused the GFC through their ridiculous lending practices. It's quite possible that Kraken could do very, very well because of this action. And Kraken Bank, when it actually launches, it's going to roll out its existing services to existing US Kraken clients with a potential international expansion in the future. Now, what does this mean to the crypto industry? It means that all of the major exchanges are going to start applying for banking licenses. You can see that there's a billion reasons why these crypto exchanges will apply for banking licenses. Kraken is the first, but it will not be the last. Crypto is not going away, and it's recognized as legal tender in El Salvador and Central African Republic. As time progresses, you will see more and more countries added to this list. When we look at the market cap of Bitcoin and we compare that to, say, JP Morgan Chase or Johnson & Johnson or Walmart or MasterCard itself, we can see Bitcoin's market value, market capitalization is actually more than those companies. So it's very much like investing in a stock. If we think about the market capitalization of Ethereum, what is that actually compared to when we look at Toyota or Nike or Bank of America? Ethereum is worth more. A lot of people would put money into Toyota or into Nike or into Bank of America or Salesforce. You can also put it into Ethereum. You can already see why the existing financial system is really worried about crypto. Think about this. With Ethereum, just say you owned Ethereum or say you own Bitcoin and you wanted to actually buy something. You can buy it with crypto. And this is increasingly the case. But how would you take your Nike shares and buy the milk or buy that new stereo that you wanted or that new mobile phone? Answer, you can't. You have to sell them and then take those proceeds. I hope this is starting to paint a picture of why the regulators are so totally scared of crypto. And why is that? Of course, it's because the governments collect taxation and fees. Their revenue comes from taxes. They just don't know how to deal with Web 3.0. So what are they doing to fight it? They're creating central bank digital currencies. I hope this has all tied everything together. And you might say, Ken, what do you know about banking and finance? I've worked for the boards of very large banks, and my background is banking and finance. I do know about the banking system. In fact, I know it very, very well. There's this very, very specific methodology that you need to apply when you're investing or trading in crypto. The first thing that you must do is to look at Bitcoin's price momentum. A lot of people don't do this because they say, I'm not going to buy Bitcoin because it's so expensive. Look, it's $22,384. That's far too expensive. I could buy a car for that. They instead go after something much, much cheaper. For example, Doge. But the key to understand, professionals do not think that way. They think in terms of percentages. What happens when Bitcoin goes up 10%? Well, if Bitcoin goes up 10% and Doge goes up 10% and you put $1,000 into each one, guess what? You got 10% on each. It absolutely does not matter what the price is. It matters what the percentage is. When looking at Bitcoin, and what's this staggered stair line here, this green line, that's the 50-day moving average superimposed over Bitcoin's price action. We saw that we recently had a secondary golden cross, and what happened? It sold down, and that's what happened when we got the first golden cross as well. We're coming close to actually starting to challenge this resistance, but we need to get above this smart money sell level around the 22,577 mark. We're not there yet, but Bitcoin is sure trying. Be prepared for market volatility with Fed Chair Jerome Powell doing his things and rattling the markets. A lot of people are worried about Jerome Powell coming in and tanking the markets. What happened to Bitcoin last time when we saw a higher and hotter core inflation rate and a hotter inflation rate and also hotter retail sales and a hotter PPI? Bitcoin absolutely rallied. This is why we need to look at price action. All of this data is actually really important from an overall, overarching perspective, but don't get caught up in the minutiae. What you really need to know is when you overcome a level of resistance, and when you overcome several, that implies that a rally is incoming. That's why we're keeping a very close eye on this resistance here. We also have an internal resistance that's actually been wobbling around here. There's a lot of sellers at that 22,600 area. They're pushing Bitcoin's price down, but Bitcoin is still grinding upwards towards that smart money sell level. It wants to convert it to a smart money buy level. Some key economic events just to keep your mind on. Fed Chair Jerome Powell starts his testimony on the 7th of March, my time, and Fed Chair testimony continues. The JOLTS job openings report will come out and the balance of trade. The Mt. Gox unlock will happen on Friday the 10th of March. The US unemployment rate will come through and non-farm payrolls also. It's very possible that a lot of people will get freaked out when the Mt. Gox unlock actually occurs, but we've analyzed this many, many times before, and we've gone through the actual fine detail of the contracts on the Mt. Gox release in previous videos. Please search on the playlist. You'll find that it's not as retail headline makers make it out to be. But that doesn't stop a lot of people getting scared, so just beware of incoming volatility. I recently shared trades when I bought this falling knife. Now, why do you buy a falling knife, Ken? Aren't you supposed to not buy a falling knife? Everybody says, the Wall Street analysts say, never buy a falling knife. Why? Because they are. I'd like to thank Art for reaching out and sharing a trade with me to show you. And what do we see here? Art was looking at Fetch AI, or FET, and he saw an opportunity to enter, and that's exactly what he did. At 42.86, he bought on red. You can see as price was retracing, he invested $1,191 into FET, and then he placed his sell order immediately at 47.57. He wanted a little over 10% return. We're going to look at Art's trade through the eyes of Art as price action was actually moving around. Now, one thing to understand, when people put a buy level on something, they may put another buy level down and it doesn't get filled. That is a possibility. Art may have missed this negative price momentum, but that's neither here nor there because we're never after the absolute bottom or the absolute top. We just want to be in the sweet spot of the market. And you can see that Fetch AI is really volatile. It's up and down and all over the place. You could say right now, wow, Art, the sell level is a long, long way away. Does Art get concerned or worried? No, he doesn't, because he's run the numbers. He knows what he's doing and he's accepted the risk. And what do we see? Price actually starting to recover. Oh, it's going to hit the line. Please hit the line. Please, please. Well, maybe Art's not saying that, but he's probably saying, okay, I feel that that particular sell line is still a reasonable level to get in and out. Did he lower his sell? In all probability not, and it was reached. Look at that. Well done, Art. This is something very important to understand. A lot of times people will look at price action and say, okay, it's not going my way. It's come down so far. So Art, for example, if Art was retail, and Art is not retail, Art's been in the industry for many, many years like myself, he could have said, oh, this trade is not going my way. I'm going to get out. That would be a retail move. Instead, a professional move is to start layering in on these levels. But keep in mind, a lot of people will layer in on different cryptos at different times. You're not always privy to actually looking at it when it's coming down. You may not be online at all, or you just may be doing other things. A lot of people feel bad when they see this kind of price action and they say, oh, I should have bought down here. You don't have a crystal ball, and it's really important to be kind to yourself. What Art did, he set a required rate of return and he waited patiently for it. You're a legend, Art. Now let's run the numbers and see what all of this means. The first thing to understand, Art bought at 42.86, this number here, and he put $1,191 in, which is the amount invested. And what about the sell level? That was 47.57, this particular level here. And what was the return? 13.18, this particular number. So over 5 days, Art made a little over 10%. Congratulations, or around $127, with an annualized return of $163,000. That's a little bit better than bank interest. And if you did really well, you might be able to get 4%. So Art's returns are absolutely staggering. Well done, my friend. If you would like to share your trades with me, please reach out. We have a very strict policy of always showing our trading levels, proving everything out. And you'll see I do that inside the masterclass as well and in the community videos. And Art has done exactly the same thing. This is what we do as a community. I've seen many communities say, oh, I bought there and I sold there and look how much I made. And they never did it. We don't do things like that. It's always important to BORSOG to start small and scale, buying on red, selling on green. You literally want to get the percentage to move in your direction. And it doesn't matter if you get the top or the bottom. Just don't think about those things. What matters is that you actually achieve your required rate of return. And that's exactly what Art did. In order to share your trades with me, please make sure that you come up to this little area just up here and click this drop down. When you do, make sure the sharing link is on so I can share this out to our beloved community, and just copy the link and send it to me in an email or on Twitter. You can email me at kstandf@gmail.com. Always remember, start small and scale is the key. If you want to do a $10 trade, that's perfectly reasonable, because what you're seeking to do is to gain synchronization with the market, because you remember, the synchronization is rewarded. Looking into the crypto market right now, we can see that Bitcoin is down. What does that mean? Bitcoin's gravity will be pulling the crypto market down with it. You might remember in the top 8 yesterday, Matic entered the top 8. It's been displaced by Doge. We spoke about Doge earlier. Looking towards the greatest gainers in the past 24 hours, top 100, Mana, GMX, XMR, Ethereum Proof of Work, CRV, CVX, XEM, Aave and XRP. It's an X day today. Turning to the greatest losers over the past 24 hours, we can see Dash, Singularity Net, Maker, Neo, Conflux, TWT, LDO, Rocket Pool and Mina. In order to get into synchronization with the markets, you must have a process, you must have a system. This is the structure of the masterclass. You must have your foundations first, and the understanding that if you don't have the knowledge, you will make losses. It's very important to know where the target is before you fire your bow and arrow. If you want to hit anywhere close to the bullseye, of course, you need to look externally on the crypto market. You need to understand economic forces, and that's a very important thing because they impact all financial markets. And then understanding the market's focus and knowing that opportunities reset daily. If you're on the right side of the percentage, you will make money no matter what the market is doing if you exit correctly. And before you buy or sell, you must master your emotional control. If you don't do this, you'll buy and sell at the wrong times. There are so many lessons inside the masterclass because it's all about teaching you how to actually look at the markets correctly. This is 30 plus years of knowledge transfer. You're not going to find anything like this anywhere else. And if you look at the testimonials, what you'll actually find is that it's very, very highly regarded. I would just suggest you to look through the testimonials, and I've never asked for a testimonial. So to all the people that have provided one, thank you so much. You're so very, very kind. You can find the CTKS Masterclass online at cryptotechnicalanalysis.org, and always feel free to reach out to the CTKS ambassadors. You'll find them on the ambassadors page. They're fantastic people. And many thanks to someone you know for very graciously offering a CTKS partial masterclass scholarship. The link is in the description of this video if you wish to apply. As professionals, we focus on positive excellence. One of the things to understand, if you're only focused on the money, you are definitely focused on the wrong thing. For example, if you want to get into business and you say, I'm going to start this business, I'm going to be rich. Well, that's fantastic. You need to know the potential. But if you only focus on the money and you don't focus on what the business actually means to you, you'll burn yourself out. Because if you don't get exactly what you anticipate, you will not have the persistence and commitment to keep on going. Everything in this world starts with a seed. It starts with an idea. And it can take a long, long time for things to grow. This is why it's so important to get your mindset correct. I thought in the comments we could talk about money. If we focus on money primarily, how does that impact success? And how does the exclusive focus on money either help or hinder a professional trader or investor? I think they're very, very good things to think about. Please let me know in the comments what you think about this. If you would like me to mark up a chart, you can request it just at this link, and that's also in the description of this video. Please make sure to let me know what you are interested in so I can help you more. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you tomorrow. Bye for now.